Hello traders, Gary Wagner here, 12:35 in Honolulu, 5:35 in New York on Thursday, 11th day of January 2024, and this is the Daily Report for gold and silver. Wild price swings, the overall characteristic as today's CPI report came out, showing that inflation continues to grow, came in hotter than economists forecast, and truly affected gold, silver, the dollar, as well as U.S. equities. Gold opened this morning at $2,029 and change, traded it to a high of $2,056, but as of this recording, just after 5:30 in New York, we have gold trading $8.60 lower and fixed at $2,019.20. To see the true carnage and price swings, we'll take a look at an intraday chart during our technical studies. Silver also had wild price swings from a high of $23.40 to a low of $22.63, but in terms of the percentage decline, was much greater than gold, losing 1.57% or 36 cents and closing at $22.70.5, which is just off of today's low of $22.63. Lastly, while the dollar closed only fractionally lower, down 0.02%, it did have some pretty wild price swings, trading to high of 102.793. The one thing that we can say when we look at this daily candlestick chart of the dollar index is although the tails, the differential, the highs and the lows of a day fall above and below the 61.8% Fibonacci retracement at 102.49, for the last consecutive 6 trading days, the real bodies, the relationship between open and closing price, have all been below this key indicator. And it is for that reason that I believe we will see the dollar return to a point of weakness. And what we have seen is after this rise that began just at the end of December was followed by a consolidating market in which all of the real bodies over the last 6 trading days fell in a tight range below 102.49. When we convert this to a 3-line break chart, you can see that for the first time since that rise, we're actually getting a red box. And on this type of chart, the key difference is like a point and figure chart. It takes out the element of time, only creating a new box and changing colors when certain parameters are met. This daily chart shows that although we saw gold decline yesterday, there was still a little bit of hope that we would see it form a base and move back above this key level at $2,033. However, data from today's inflation report did not support that, taking gold lower. We'll look at an intraday chart in a bit, but you will see the gold a couple of hours ago was actually trading higher by about $5. The next level, should gold continue to trade lower, and today's news warrants that is a distinct possibility, is this trend line created from the series of lows here as well as here, and that occurs roughly at 2014 to 2015, with major technical support forming around $2,000. As I said the other day, technical support will only hold as long as the data supports it. And if a new event or report come out that will change market sentiment, that is when we will see that technical support erode and the market react to the fundamental news, report, or event. And that is precisely what we saw today with gold declining by almost $9. Traders, to get a real sense of the volatility and major price swings that we saw in gold today, we need to look at an intraday chart. I've just put up a 30-minute standard candlestick chart. Each candle represents a half hour in trading. This green arrow marks the start of today's trading, Thursday the 11th. The report was released at 8:30, which is this red candle here with long lower and upper wicks or tails. We can see that the high today came in during that 30 minutes, 2,056, and the low of this candle, 2,029, an incredible price swing in a single half hour. It traded sideways for a couple of hours. It dropped over the trading session to the lows of the day. That would be this candle right here, 2017, and then began to rise as we went into the close. The market has reopened in Australia. It is now 1 o'clock in Honolulu, 6 o'clock in New York, and you can see that this first green candle here has put gold at $2,033.50. But the real action occurred between the release of the report and the next couple of hours of trading. We will remain flat as we go into the weekend to get a better consensus of how the Federal Reserve might react at the end of this month to today's report. Lastly, a look at silver. While we might find silver recovering if U.S. equities recover and form a base back above the 61.8% fib retracement at $22.95. At least for today's activity, it traded below our stop at $22.74.5 when silver sold off to $22.63 on an intraday basis. That affected our silver traders' current trade. The stop was executed at a loss. While we did get huge price swings in both gold and silver, I would suspect that silver, if U.S. equities begin to recover tomorrow as well as next week, will begin to form a base back above this price point. But as in gold, I do want to let the dust settle over the weekend so that we can reassess our charts and our strategy. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.